In any investment market, it's crucial not to lose sight of the bigger picture. And here to emphasize this point is our next guest, Bob Moriarty, a former fighter pilot for the U.S. Marine Corps and a Vietnam War combat veteran. Mr. Moriarty has a deep love and commitment for this country, but that hasn't stopped him from calling out the absolute stupidity of our government as well as the international insanity that is brewing via negative interest rates. As he sees it, we may be on the cusp of a massive paradigm shift that is unparalleled in perhaps human economic history. Mr. Moriarty points out that no government body has ever kept its fiat-based promises. Therefore, gold and silver represent a vital insurance policy against this coming crisis. To help navigate these waters, we've laid out a long-term strategy which you can find at crushthestreet.com/4W. This unprecedented catastrophe can hit us at any time. Therefore, please go to crushthestreet.com/4W to protect your family. So without any more delays, here's Bob Moriarty.
Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and I'm joined today with a returning guest, someone who we're going to draw from his fountain of knowledge here, Bob Moriarty of 321gold.com and also 321energy.com. We've had great discussions in the past. We've talked about precious metals. We've even talked about and somewhat went back and forth with regarding cryptocurrency, Bitcoin specifically, and those were fun conversations as well. And I'm looking forward to have another exciting conversation today, specifically as it pertains to this rising price action we are seeing in gold and silver, which is really starting to turn the mining companies around. It took a little while for this to happen, but we're starting to see the mining companies come around and get the message that we are in a bull market. So without any further ado, Bob, thanks for coming on Crush the Street with me today.
Well, Ken, it's really good time. There's some interesting things happening.
Well, let's talk a little bit about why we're starting to see this turnaround here. Obviously, we have $15 trillion in negative yielding debt. What does that even mean? That's just such an unprecedented economic experiment that we are in the middle with now. And, what does that mean to you now, Bob?
I'm not sure I could call that an experiment. I'm not sure it qualifies as an experiment. I think voodoo would be a better term, financial voodoo. If 5,000 years of financial history, we have never had negative interest rates. And the reason we've never had negative interest rates is they don't make a lick of sense. The idea of loaning somebody money and paying them to borrow it is beyond stupid. I don't know what kind of idiot came up with the first suggestion to do that, but I hope that eventually he's drawn and quartered and they write books about its stupidity.
In a transaction, both parties give something, right? One person gives and the other person gives something back. But in that situation, there's one party giving twice, right? They lending money and then they're paying, and the other side of the transaction is just taking on both ends. And that's why it doesn't make sense, right?
Well, here's how irrational it is, and you have to look at it in context. Let's say, and actually I think it's closer to 17 trillion in negative interest rates, not 15. It's going up by leaps and bounds. But the sovereign debt of Italy, and Italy is a serial bankrupt, is lower than the sovereign debt of the United States. Now that's not even stupid. That's not even voodoo. That's like shithouse rat crazy. Are you kidding me? Italy is paying less interest than the U.S. does, but it's going to end badly. And we need to step back just a little bit. The real issue is the $250 trillion in debt in the world. The Federal Reserve and all the central banks of the world have flooded the banks with currency, not money, but currency, since 2008. Everyone recognizes it's never going to get paid back. They painted themselves into a corner where if they raise interest rates, the whole thing blows up. And what they don't realize is they have painted themselves into a corner. They all have. And there's no way out. And you either keep pretending it's going to get paid back, or eventually say, you know, we need to have a debt jubilee and admit the money's never going to get paid back. They simply cannot raise interest rates or the system's going to blow, but it's going to blow up anyway.
Bob, so what is it that you are seeing then in regards to precious metals? Is it all of this starting to come together, and are the walls coming down for precious metals to move higher here and starting to reflect all of the underlying problems that are fundamentally plaguing the world?
Yes. Okay, and I say that yes being the definitive answer. I'm a gold bug. I've owned gold, been an advocate of gold or silver or platinum since 1968. I believe everybody needs to have some money and physical resources they can put hands on, because they are an insurance policy against government stupidity. I do not worship gold. I don't think that it's something we need to bow to. I don't think there's anything magic about it. It's an insurance policy, but it's an insurance policy that you can buy when your house is burning down. Now, here's what's scary. I look at the price of gold, and I look at the price of silver, and I look at the price of platinum, and every day I'm going, damn, I never thought that would happen. I think platinum's up $23 today. Silver was up 80 cents yesterday. Gold's up a couple $100 in the last 6 weeks. And as investors, we look at it and say, wow, I'm getting rich. But what we really need to be saying is, hey, gold and silver and platinum and palladium and rhodium are all saying something very dangerous is happening. I wrote a book in January. I'm not sure if you ever got a chance to read it or not, but I literally predict in the book that this would be the year of the Great Reset, and we would have a financial crash in September, October. And I believe we're on track.
Wow. Well, that's powerful, and powerful words there. What we're seeing right now in precious metals, I think it's hard to anticipate, because we all base our experiences on our most recent experience in the market, right? And up until now, gold would move up a little bit, it'd get into the $1,300 range and then fall right below it once again and again. So watching it blow through that 1360 point, then get through 1400, and then get through 1500, and then actually, hold above 1500 for a material amount of time and then move higher. I mean, a real sea change has taken place in the metals. So I'm not asking you for a price prediction. I know that's extremely difficult, but what would you be comfortable seeing gold going to, where you're like, okay, that makes sense for gold, as opposed to, I believe it's extremely undervalued at $1,500. Does $3,000 gold look good to you as its fair value?
Actually, I can't do that at all. But let me give you an analog. Who would have predicted what the NASDAQ would go to in 2000? Or who would predict what real estate went to in 2007 and 2008? Or who would have predicted silver at $50 an ounce in the spring of 2011? who could have predicted how high Bitcoin got? Every one of those markets went into a feeding frenzy and went far beyond what anybody could have rationally come up with. I measure human behavior, and I'm pretty good at calling tops, and I will take credit for calling the top in the stock market in 2000 and in real estate in 2007 and silver in 2011 and Bitcoin in December of 2017. I'm not any good at guessing price, and quite bluntly, I don't think anybody is. But you're going to see the biggest bubble in history. You're going to see it in gold. You're going to see it in silver. You're going to see it in platinum, rhodium, palladium. You're going to see it in the mining stocks, and there are mining stocks that were a nickel last week that are going to be $5 or $10 or $20. You're going to see things that are going to knock your socks off, and I don't care how smart you are, nobody is going to be able to see the top in time.
Yeah, no, that's powerful. And I think just going through the most recent Bitcoin bull market and watching how crazy things got and how quickly things turned around and became such a bear market, following that in 2018 and it just becoming a dry desert. You forget how good things are and then how bad things can get when things turn around. And I think because of how quote unquote bad things have been in precious metals, it's hard to even imagine that, a 10-cent stock going to $5, because we're just so used to gravity taking hold of these mining stocks and ultimately just watching these charts go straight down. But, we're anticipating a really exciting year here in precious metals and also the mining sector. So we've seen gold and silver move, right, Bob? So what phase are we in regards to the mining stocks? Because that doesn't necessarily move exactly with the underlying price of gold and silver.
Let me give you some facts. Gold hit its low in August of 1999. Silver hit its low in November of 2001. The gold stocks really didn't get cranky until 2003 or 2004, and then they peaked in 2008. It's amazing to me. There are some great stocks out there that were very marginal at $14 silver, but at $19 silver, it's like a license to steal. And you've seen it with stocks that you and I have talked about in the last week or two. A stock can double in a day. It can go up 200% in a week. We're going to see a lot more of that, and there are some incredible fortunes to be made. One of the things we haven't talked about, we should talk about, when you're talking about the price of gold, you're really talking about two commodities. What are the two commodities?
Gold and silver.
No. When you're talking about gold, you're talking about the price of gold, but you're also talking about the unit in which you measure it. Okay? So you've got the price of gold in Canadian dollars or British pounds or Australian dollars or American dollars. Okay, so you've got the gold on one hand, and then you've got the unit of measurement on the other hand. What if all currencies are about to go to Zimbabwe? What if?
Then you're betting on the currency to do what it's going to do, and you're just retaining your purchasing power by owning gold.
Exactly right. I mean, here's what's funny. If I ask you to give me a quote for the value of gold in Zimbabwe dollars, what would you tell me?
It's uncalculable.
Exactly. Okay. So what I'm going to suggest is, in this rush to the bottom, and it is a rush to the bottom in all currencies, talking about the price of gold or talking about the price of mining stocks, it's really absurd. What you're really trying to do is claim them as insurance policies. We don't really give a damn if we have an accident in our car. Okay, that's what insurance is for. If you have an accident in your car and you got it insured and you got a decent insurance company, you go out and get another car. Cars are no big deal. Now, we would hope our house doesn't burn down and we would lose our possessions, but in fact, we have the insurance of where we live and on our possessions for exactly that reason. Mining stocks, precious metals, are nothing but an insurance policy, and we hope we don't have to make a claim, but we go to sleep soundly at night knowing that when everything goes to shit, we're protected. And I'll be blunt, I'll tell you, there isn't a single person listening to this who knows how bad it's going to be. It's going to be worse than anybody ever imagined. We're going to end up with a debt jubilee because it's the only possible solution. So when you talk about what's gold going to go to in terms of the US dollar, you might as well ask what's gold going to go to in the Zimbabwe dollar, because it's going to be just as meaningless. I don't give a shit where gold goes. I know at the end of the day, gold is going to have some value, and those things won't. Now, it's a shame we don't have a video today, because right behind me on the wall, I've got a bunch of different currencies, okay? I've got bonds, Confederate bonds from the Civil War that are now worth about $50 as curios. They were originally $1,000. I've got $20 gold certificates that are now curiosities, but they're not good for gold. I've got Civil War Southern currency that is now a curiosity. I've got Revolutionary Pay certificates. I collect all these promises the governments have made in the past and then lied. And, 100 years from now, as Faber says, Dr. Faber, you should have $1 million U.S. Treasury note on the wall and point to it and tell your grandchildren that used to be money. We're going to go to a new currency.
Bob, let's talk a little bit about silver. Silver going to $50, just getting back to its all-time high, right? That would be an epic move. We're seeing $19 silver now. It's been an exciting, last month or so. Silver took a little bit of time to kind of get the message that gold was moving up, but sure enough, it's slingshotted higher here in the last little bit. It outpaced gold, and we're seeing a lot of excitement in the space. But I want to ask you, what's the best way to play silver outside of buying physical silver, considering there's not that many primary silver producers out there? Much of silver comes from as a byproduct of copper, lead, and zinc. So, if we do have this moonshot to $50 or $100 in silver, what are, maybe not a specific company, but what are some of the best ways to capitalize on that move?
Well, you raised a real good point, and I'm glad, because I don't think I've ever heard anybody discuss it. There are a ton of gold companies out there. There are a ton of copper companies out there. There are virtually no platinum companies out there, and there are 0 rhodium companies out there, and there's a few silver producers. But the real key to understanding silver is the leverage. And when you're in a bull market, silver will outperform gold. You can literally look at the ratio of silver to gold, and it's varied from 16 to 1 over the last 100 years to 100 to 1. Right now it's 83 to 1. Recently it was high, it's 93 to 1. Anything above 80 to 1, silver is cheap and gold is expensive. And anything below 40 to 1, silver is expensive and gold is cheap. The ratio over 100 years, it's been 53 to 1. So literally, that's a conservative bet if somebody thinks it's appropriate, you can actually trade the gold silver spread as a commodity, or you could buy silver, or you could buy silver and short gold. There's all kinds of ways to do it. But you raise a valid point. There's probably no more than half a dozen or 10 primary silver producers. But those are the companies with the most leverage. And I've got companies that have been 15 cents that I sincerely believe will be $15 a share.
That's powerful. Well, one of the things that you talked about in your one of the last interviews I heard you doing was talking about central banks, and the question was, are central banks afraid of, the price of gold, or losing control of the price of gold and silver? And you brought up the point that they've been net buyers of gold since 2010. What is the play that we are seeing now with central bankers, and are they preparing for something that is yet to have played out? Are they prepared for the unspeakable? I'll leave it at that.
Yeah, I mean, again, here's what's really funny. I can answer that in a word: yes, they are. Okay, and while I will qualify that by saying central bankers are some of the dumbest bastards on earth. Okay, they all went to the same schools, they all studied the same textbooks, they're all dumber than bricks. However, they're not that dumb. And some of them are looking around and saying, well, we have to start burning bales of dollar bills just to stay warm in the wintertime. What would it be nice to have? And in fact, for all the guys screaming about manipulation and conspiracy, central banks have been net buyers for 9 years. So I don't really want to hear about how central banks are suppressing gold, because it's bullshit.
And so is it still in the interest of the central banks to keep things same old, or is this just a small portion of their portfolio, or is it becoming a material game changer where if we did see a massive move in the price of gold, they would actually benefit from their holdings that they have in precious metals?
Well, what it has done, it has turned central banks into religious nutcases. Every night they get down on their knees and they pray and say, "Oh Lord, please, Lord, save us from our stupidity." They know what they've done. Okay, it's that simple. Now, let me give you a number, and I can't verify if this isn't exactly right, and I don't want people throwing rocks at me, but I think the number is fairly accurate. The total amount of money invested in gold, silver, metals, and mining stocks is something like 0.5%. In 1929, it was 10%. In 1980, it was 3%. Okay. You got this little tiny door, and everybody's going to try to go through the door at the same time. And when they do, it's going to be explosive. Now, here's what's funny, and we kind of danced around it a little bit. The gold and silver market, when I talk about gold and silver, I'm talking about all 5 metals, is in its infancy. This rally is just starting. Now, I would love to see a correction. I'd love to have the opportunity to buy gold a little bit cheaper and buy silver a little bit cheaper. It has absolutely run away, but this is the start. This is not the beginning of the end. It's just the end of the beginning.
Wow. I love the way you put that. This is not the beginning of the end. It's just the beginning of the end. It's like I don't know why I thought about this, but it's like saying she's a 2 at 10, but a 10 at 2. I don't know. I don't know why I was thinking about this moment. But anyways, Bob, look, this is a really exciting time. And this is one of the reasons why I wanted to bring you on this show and discuss the metals. here and now, because look, nobody was excited about it when we were doing our last interviews. In fact, we spent most of our time debating whether or not Bitcoin had any value or not. And now we can really dive into it, and people care. Now, I'm glad we talked about it in our previous interviews, because I believed those were the times to be interested in it. Of course, even you just mentioned now, I wish I could see a little bit of a pullback, right? I think we all feel that way. Now that we have this, rising price confirmation, $1,300 gold is a steal now. But without this rising price confirmation, everyone's sitting around waiting for something to happen. So, kind of maybe share some closing thoughts as, we close out this interview here on your thoughts on precious metals. How important is it for people to be, tuned into this? And, how does it pertain to even owning equities in this current environment? Is there a major risk there? And do you anticipate a transfer of wealth to happen?
Okay, yeah, and that's a really good question. I'm glad you asked that. Do you happen to know, or do you remember when the cartographers were making maps 500 years ago, and they came to the limits of the world as they know them? Do you remember what they put on the maps?
I don't.
Okay. They would say, "Here be dragons." Or if they were Romans or Greeks, they would say, "Here be lions." Now, I don't care who says it. Nobody knows what's going to happen. All any of us can do is guess. Now, what I will say is, if you take what you do know, I know that $250 trillion is not going to get paid back because there isn't enough money in the world to pay it back. I know that bad things are going to happen. This is a time to be extremely conservative. You should have some physical metals in your possession where you could put your hands on them. You should be invested in physical metals that you can have stored somewhere as an insurance policy. You should speculate in some of the mining stocks. But one of the things that absolutely could happen is the entire banking system shuts down for 6 months and the entire system freezes. Now, I believe, and only time will tell me if I'm correct or not, I believe that Deutsche Bank, with their 250 trillion, now that 47 trillion in derivatives, I believe Deutsche Bank is doomed. I believe that $700 trillion in derivatives is going to freeze up the entire market. And we don't know how bad it's going to be. So it's a good time to be extremely conservative. Keep some gold, keep some silver, keep some cash on hand. Do not get into debt. Keep some extra food if you need to. The people who are prepared are going to reap rewards such as they have never dreamed. We are going to have the biggest transfer of wealth in history from the fools to the people who have prepared.
I love it. Well, that's powerful, Bob. Thanks so much for coming on the show with me today. We'll have you back on in the near future here, and we'll hash it out on what's going on in the Bitcoin market. But I didn't want to take it that direction today. Again, thanks so much for coming on the show and just sharing with us your insights and what's going on in the market. I'm really excited about what is happening here in 2019. As I started the year out this year, in my first video, saying this is going to be the year of precious metals. We had the sea change that took place with stock market correcting 20% as we ended 2018, and a lot of underlying changes are happening, and it's a very exciting time. So Bob, thanks so much for coming on Crush the Street with me.
Okay, it's been a real pleasure, and you had some great questions and comments. Thank you very much.